Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hello, and thank you for joining me today on Reverse Mortgage Radio. Hopefully you're enjoying your long weekend, if you're still working, if you're not working. Anyways, we've got a couple things to talk about on Reverse Mortgage Radio. But before we dig into the meat of the program, I do want to, not necessarily, well, I guess I should issue an apology for last week. Whiny radio is not good radio, and I apologize because I was not in a real good mood, and I kind of let that shine through, or not shine, but come through on the radio, which is bad. I should not have done that. When I recorded the show, I just wasn't in the best of mood, and I let that article really get to me. Anyways, I apologize for that. And I also want to say thank you because this is Thanksgiving weekend, and I am so thankful for all the listeners that I have and all the customers too. I do this because I enjoy the relationships that I make with my customers and with other people in the industry. I think it's a fantastic industry. Everybody, and I could say that I've never really met anybody in this industry that wasn't here for the right reasons, that wasn't here in doing reverse mortgages or supporting the people that do reverse mortgages because they care about the end user, the client, you, the person who's getting the reverse mortgage. And we want to make your life better. We want to help you improve your retirement years so that you can live a full and joyous retirement, traveling or doing whatever you want to do in retirement without worrying about money. That's the bottom line. And you know, money is not happiness, but lack of money sure can make you unhappy, right? And a reverse mortgage helps you access some of the equity in your home so that you could hopefully get rid of some debt or use it to improve the security. Because a lot of people get reverse mortgages. They eliminate their forward mortgage payment, and then they leave the rest of the money in a line of credit for emergencies. And that peace of mind is why we do the reverse mortgages. Anyways, I just wanted to apologize and to say thank you to start the show. Now, first of all, the way I want to start off the show today is there's something called a maximum claim amount with all FHA-insured reverse mortgages. Basically, what happens is FHA puts a cap on the maximum value that we can consider when we're calculating how much money we can loan you on a reverse mortgage. If you've got a $3 million home, you're not going to be able to use all of that value in the formula that we use to calculate how much we can loan you. There's what's called proprietary reverse mortgages for people in those situations where you can tap into more of the value of your home on a non-FHA reverse mortgage. The reason is that in 2024, the maximum value that we would use in the formula to calculate how much we can loan you was $1,049,825. That was the maximum value. So if you had a $1.3 million home and it appraised for $1.3 million, we were going to use the figure of $1,049,825 as the maximum value. So we take that value, we take the age of the youngest homeowner and the interest rate. And based on those three factors, we come up with X number of dollars that we can loan you. And out of that money that we can loan you, we have to pay off any existing loans against the home. So let's say we can loan you $400,000 for if you have this $1,149,000 or $1,049,000, whatever the figure was. Okay, you've got that much available, and we can loan you $400,000. But if you had a $500,000 mortgage on the home, we couldn't help you because we have to loan you enough to pay off that existing mortgage. So keep that in mind. That's one of the requirements, because I've talked to somebody again this week who, it seems like every week somebody calls and they think we're making a loan on the equity in the home. That's how we calculate how much we can loan you. So this lady called, said she had a $400,000 home. She owed about $220,000, I don't remember, $240,000 on that home. And she said, so I still have all this other equity left, and then you loan me 30 or 40% of that equity. I said, no, that's not how it works. We loan you 30 or 40% of the value, and then out of that money that's available to you, we have to pay off any existing mortgages. That's the way the FHA-insured reverse mortgage works. Now, there are proprietary reverse mortgages. There's one reverse mortgage that can be used as a second mortgage for more expensive. This is more expensive homes, the $1.5 million, $2 million, $3 million homes. Let's say you've got a $500,000 first mortgage at 3%, and we can loan you a new reverse mortgage to pay off that, or on a proprietary loan, but it's going to be at a much higher percentage rate. So you say, well, that doesn't make any sense for me to loan that, and I only need $100,000. So we could do a $100,000 second mortgage that's a reverse mortgage. Believe it or not, that is possible. But you've got to have a lot of equity, and your home has to be worth a fair amount of money to start with. So keep that in mind. If you've got a situation like that where you've got a $1.5 million home with a relatively low first mortgage, it's very possible we could help you out with a second mortgage that's a reverse mortgage. You continue to pay your first mortgage just like normal, but then there's no payment required on the second mortgage. Okay, but let's get back to what I was originally talking about. I apologize. The maximum claim amount, it's adjusted every year, or it's looked at to be adjusted every year. It's not always adjusted, but it has been lately because appreciation has been going kind of crazy. And although it's slowed the last couple of years, it's still increasing in a big part of the country. I said that the maximum claim amount was $1,149,825. That was the maximum claim amount for 2024. This week, HUD came out and announced that the maximum claim amount for 2025 is going to be $1,209,750. So it's an increase of almost 60 grand. And basically, that can mean that if you've got, let's say you've got a $1.25 million home and you need every penny available to you, you could then get more money if you waited to start the loan until January. Okay? For most people, it's not a big deal, but just keep in mind that that's kind of how it works with reverse mortgages with the FHA. All right. Now, the main thing I want to talk about, but before I get there, I should give you my phone number and stuff. So if you have any questions about reverse mortgages, please call me. My name is Bruce Simmons. You are listening to Reverse Mortgage Radio. My number is 303-467-7821. 303-467-7821 is my direct line. It rings right to me. And if you get my voicemail, please leave me a message and I will get back to you just as soon as possible. But you can also visit me online at reversemortgageradio.net. reversemortgageradio.net. You can go there and download my free consumer guide. I've got a totally free consumer guide that you can download, and you can also get a free quote. And this isn't one where you plug in information and then I call you back. This you'll see the numbers right away. As soon as you plug in your date of birth, the value of the home, your address, things like that, then it'll spit out how much we can loan you on a reverse mortgage. Now, that's a very, very conservative figure, and odds are the closing costs are a little higher on that program than they would be if you called me directly. Just be aware that odds are we can loan a little bit more money than what that program says, but I've got to be conservative on that because I don't want to overpromise and underdeliver. Okay, let's talk about something that I've been considering for a while, which is how is the Trump administration going to affect both housing and reverse mortgages? Because, through cabinet appointees, Donald Trump's going to appoint a new HUD secretary and a new FHA commissioner, things like that. And these people have a lot of power to make changes just at a whim, basically. So now sometimes for major changes, they need to make announcements and solicit feedback from the community and things like reverse mortgage professionals or possible consumers and things of that nature. But let's talk about that, because generally Democrats historically are a little more favorable to government programs than Republicans. I think most people would agree with that. And when Trump was president last time, he tried to make cuts to HUD, and they never got through Congress. I think at the time he didn't have a majority, or there were a lot of people fighting him the first time. I think that there's more people on board with Trump this time, and that could be positive or negative depending on your political persuasion. I'm not here to talk politics. I'm here to talk reverse mortgages, which politics affects, because the HUD is a government entity. Okay. And while I'm of the opinion that less government is better, this program is pretty self-sustainable with the reverse mortgage program. It's called the Home Equity Conversion Mortgage, or HECM is what we call it. So I may refer to it as HECM. That's the FHA-insured reverse mortgage program. And that's been very sustainable since 2010 or so, when they made some changes, because in 2008, reverse mortgages were negatively impacted because of the downturn in the economy in 2008 and all the foreclosures and things. So, but since they made some changes, really the changes started in 2009 and they went through pretty much 2018. That was really that decade was a very challenging decade for us, because there was changes every single year, sometimes 2 or 3 changes. And in 2017, there was a huge reduction in the amount of money we could loan to people, but then interest rates fell, so it didn't have as big of an impact. But now we're feeling that because interest rates are going back up. So the rule change that was implemented in 2017 is really affecting us now, because interest rates have gone up so much, and it reduces the amount of money that we can loan to people. That's why now we can only loan 33, 34, 35% of the value to people in their early 60s, whereas in 2020, 2021, we were loaning 50%. And that just tells you the difference that we're seeing now. And as interest rates go up, the amount of money we can loan on a reverse mortgage goes down, and vice versa. If the interest rate comes down, the amount of money we can loan goes up. I don't think interest rates are going to change dramatically. They're going to go up and down. They always have, no matter who's in charge. They've always gone up and down. And the amount of money that we can loan is going to vary from week to week because of that. And then there's trends where, like in the end of 2022, rates started going up. Everybody knew in 2023 rates were going to come down, but they didn't. They kept going up. So a lot of people put off doing a reverse mortgage in 2022, and then in 2023, they were still making their mortgage payment, and I couldn't even do a reverse mortgage for them because I couldn't loan them enough money to pay off their existing mortgage. So we got to keep those things in mind when we're looking at this. Nobody knows what's going to happen, whether it's the administration. Could be another 9/11. Hopefully not. Definitely, hopefully not. There could be another recession, major recession. And I think that likelihood is very possible in 2025. And if that happens, are rates going to come down? And if the rates do come down, are they going to affect the longer term rates, the 10-year rates like we talked about last week, where as the Federal Reserve lowers the interest rates, it affects the short-term rates, but it doesn't really affect the long-term rates as much now because just the way the situation is with all the economy and the debt and everything else. Also, too, we don't know what's going to happen with this DOGE program, the Department of Government Efficiency, where Elon Musk and Vivek Ramaswamy are going to cut all this money. Maybe they're going to cut from HUD. And that could hurt the program. I'm not sure. But let's talk about this because basically there were some articles that came out over the last little bit about reverse mortgages and the economy generally, how how Trump is going to, his administration is going to affect things. So what I want to do is give you a couple of quotes from supposed, air quotes, experts and kind of how they see these things going on. Because Realtor.com chief economist Daniel Hale, this woman, she told Newsweek, she said, despite a strong mandate from voters, the impact on the housing market remains a toss-up. That's what I said, just now. She said it a little more succinctly than me. Another guy, Lawrence Yoon, chief economist and senior VP of research at the National Association of Realtors, what they call NAR. He said, if government spending can be restrained in combination with a tax cut or the economy booms, then the Federal Reserve cuts will make a bigger impact on lowering mortgage rates. I'm not even 100% sure what that means. I think it was a little bit of a jumble. But basically, experts don't know what's going to happen, right? So that's what I take away from this. And I talked with a potential client this week who's so hung up on what's going to happen and not knowing what's going to happen. She said, well, should I do it now? Should I wait? What are the benefits of waiting and things of that nature? And we'll talk about that here in a little bit. But I think a lot of the uncertainty with all the cuts and the people that Trump's bringing in, they're disruptors, right? They're going to be doing stuff that are difficult to predict how the economy is going to react. So we just don't know what's going to happen. What will the new HUD secretary do? That's the other thing, too, is we've got the new HUD secretary, what's his name, Scott Turner, and he's going to come in and supposedly make cuts to the HUD program. A lot of people are saying that the cuts that he's going to make are probably like the rental vouchers for Section 8, where they give rental assistance to people with low income, which is too bad because that's a good program. I think it helps people stay housed and not be homeless. But then, too, what other changes might be made? Because, see, the way reverse mortgages work, I use HUD and FHA kind of interchangeably, which really is not correct, but that's just the way I see it. HUD is like a big umbrella, and FHA is a division under the HUD umbrella. HUD stands for the Housing and Urban Development, the Department of Housing and Urban Development. FHA stands for Federal Housing Administration. And FHA are the ones that they kind of oversee the reverse mortgage world, if you will. They're the ones that set the rules for us, but HUD sets bigger rules. And the way it works with reverse mortgages is when a lender closes on a reverse mortgage loan, they close it, everything funds, you get your money as the borrower, and everything's good. But then they have to make sure that FHA comes in and they do an audit. They audit the file and make sure that it meets their guidelines, and then they insure it. So it's not a loan, or a reverse mortgage, an FHA-insured reverse mortgage is not a loan from the government. It's a loan from an independent company, and it's insured by FHA. And then what happens is these lenders, they get 1,000 of these loans together or 5,000, whatever, and they pool them together in what's called HMBS. You've heard of MBS as mortgage-backed securities. H stands for HECM, mortgage-backed securities. And they sell those off. And they sell them off through a government entity called Ginnie Mae. You've heard of Freddie Mac and Fannie Mae and Freddie Mac. Ginnie Mae is for government loans, kind of the same thing. They're a GSE, a government-sponsored entity, I think, or enterprise, something like that. And basically, then they go through them, and those GSEs kind of set additional rules for the distribution of that. And that way the lender can get their money back and they could turn around and make new loans. That's kind of how the game is played. And people who invest in these loans, they are the ones that make the money on them eventually. Okay. So that's kind of in a nutshell how that all works. If HUD comes in and they cut, let's say they cut the personnel and they don't have as many people that can oversee the loans as much, it might take longer to pool these loans together, which could make it more difficult for investors, the companies that actually make the loan, to have the money to make more loans. I don't know. And it just might be kind of a backlog type situation. The other thing is, when Trump was in back in 2017 and 18-19, he tried to decouple Fannie and Freddie from the federal government. Right now, they're still under a big part of the federal government, which goes back to the 2008 crisis. That's kind of when the Fannie and Freddie a lot of their stock was purchased by the federal government. So the federal government really owns these government-sponsored entities. And the market might react unfavorably if Trump kind of sends them off on their own again. You know what I mean? There's all these unknowns that we have too. That's just kind of the way it works. And there's also other things that the HUD secretary can do. He could come in and decide that, you know what, HUD's goal is to help low-income people. We should not be insuring homes under the mortgage insurance program of $1.2 million. And he could lower that maximum claim amount that we talked about at the beginning of the show, where he could lower that down to $850,000 or something, which doesn't affect a ton of people, but it'll affect people on the higher level. I mean, I'm doing a loan right now for a guy in Littleton, a real nice ranch. I think it's 4-bedroom, 2-bath. I don't remember, a couple thousand square feet, but it appraised for like $1 million. I mean, that's a little extreme now in my mind. $1 million for, your standard ranch home, which is a very nice one, really a nice home, but still, it just kind of blows my mind. It blows my mind. My own house, I paid $150,000 for it in 1997, and now it's worth $550 or some crazy figure like that. But anyways, he could come in and say that just arbitrarily lower that maximum claim amount, which would affect people on the higher end. He could also increase the mortgage insurance premium. He could do some other things like changing the formula that we use to calculate how much we can loan. We call it the principal limit factor, PLF, in the industry. Now, I don't think any of this stuff's going to happen. The most likely one is probably changing that higher limit, the max claim amount, from 1.2 million down to something more reasonable, maybe $1 million. I don't really know. And the likelihood of that happening is probably pretty small too. So I don't see a lot of impact on the reverse mortgage program generally. The impact that I could see is maybe on the real estate market generally, as far as if interest rates go up, obviously, then that's going to affect the real estate market. Or how can they make it more affordable even for the real estate market? I'm not sure. They could reduce regulations to increase building. That's a possibility that I can definitely see if they bring down regulations for buildings. Of course, let's hope they don't mess with any safety regulations, right? Because we all want to have safe homes. But we need to build more homes, because that's why I don't see any kind of housing crash coming, because we have a housing shortage. Whereas in 2008, there was a ton of building before 2008, and there was a surplus. And so all of this stuff is kind of speculative. Well, it's all speculative, and we just don't know what to expect. One thing that I would say is, going back to like the people who had an opportunity to get a reverse mortgage in 2022, but they thought interest rates were going to come down in 2023. In 2022, I could loan them enough to pay off their mortgage, but they weren't getting as much money afterwards as they wanted. So they thought, okay, interest rates are going to come down in 23, so I'll just wait until interest rates come down, then I'll do my loan and pay off the reverse mortgage, and I'll have more money. Really, and that proved to be a big mistake. If you qualify for a reverse mortgage today, I recommend doing a reverse mortgage today. Just like this customer that asked me today, said, well, why should I wait 6 months? Like, what are the downsides if I wait 6 months? And really the biggest downside is if interest rates do go up. You qualified today. If interest rates go up, now you're going to end up with less money in 6 months. Even though we might be able to round up your age to where you're a little older, it's not going to make a big enough difference if the interest rate goes up by a quarter or a half a point, because that little bit of a change can mean thousands or 10,000 or more dollars available to you on a reverse mortgage that would not be available to you if the interest rate went up. So now, obviously, too, interest rates could come down. But like I said, let's say you get the loan today because you could pay off your mortgage and you have almost no money left over. So there's no money left in a line of credit, and you don't get to pay off the bills you want to, or you can't do the extra home improvements right now. You have to save your principal and interest payment, because with a reverse mortgage, no mortgage payments required, but you still have to pay your taxes and insurance and maintain the home and live there as your primary residence. But no principal and interest payments are required. So if your principal and interest payment is $1,000, now you've got an extra $1,000 a month that you're not paying on. And then if interest rates do come down, let's say a year or 2 years down the road, interest rates drop by a couple percent, odds are the value of the home is going to go up, because as interest rates drop, I think the value of the home is going to increase. You could refinance the reverse mortgage, and refinancing costs are a lot less than getting the reverse mortgage for the first time. So you could refinance it and you could possibly refinance it and access additional equity on your home. So in my mind, it just makes sense that you can, if interest rates don't come down, let's say you do the loan today and interest rates never come down. You're charged interest on whatever money you took out. But in the meantime, you're eliminating that mortgage payment, the principal and interest mortgage payment that you otherwise would be putting out every month. And if you wanted to, you could even make payments on the loan, on the reverse mortgage, and that every penny that you put into the reverse mortgage as far as payback, that money goes into a line of credit, and you have access to it at a future date if you wanted it. You don't have to. It'll just lower your balance when you make the payment. But the extra money that you put in is going to go into a line of credit that you could even access down the road if you wanted to. It just makes sense. So in a nutshell, a reverse mortgage, it allows you to pay off your existing mortgage if you have one. If you don't, it can create a cash flow for you, or a reserve account that allows you to have the flexibility of not having to put other money that you've got in a 401k or something and have that sit stale in a money market account, not earning much interest or anything. And you have this extra line of credit that's available for emergencies. And that way, all your money that's in retirement can be put to work. There's a lot of different strategies with reverse mortgages. And I don't know what's going to happen with interest rates or with the market, any of that stuff. I've got my opinions, and I've shared those in the past. A lot of times they're wrong, but I think that a reverse mortgage makes sense for a vast number of people. And if you don't get all caught up in the politics and what's going to happen or what might happen, what might not happen, a reverse mortgage can make a lot of sense for you. Please feel free to call me with any questions about reverse mortgages. You can reach me directly at 303-467-7821. 303-467-7821, or visit me online at reversemortgageradio.net. Hopefully you had a fantastic Thanksgiving and didn't get in too many fights about politics and all that great stuff, and you're full of everything, and hope you have a great weekend.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821, or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.